You spend 99% of your time analyzing companies, reading charts, looking for the next multi-bagger, but you're focusing on the wrong thing. Asset allocation is what smart money understands but retail investors ignore. Imagine you are building a cricket team and you have the best batsman in the world, let's say Virat Kohli. Now imagine your team is just 11 Virat Kohlis, no bowlers, no wicket keepers, just 11 batsmen. You will lose every single match. Why? Because you pick great players, but you build a terrible team. Investing is exactly the same. Stock picking is just like choosing the players, whereas asset allocation is building the team. A famous study called the Brinson Study proved this. It showed that 91.5% of a portfolio's performance can be attributed to asset allocation. That means the ratio to stocks to bonds to gold. So if you have 100% of your money invested in stocks, you don't have a portfolio. You have a team of 11 batsmen walking out to play on a bowling pitch. So how do you actually build this perfect team? This is where Ray Dalio comes in. He built the all-weather strategy and his philosophy is incredibly simple. You cannot predict the future, but you can prepare for it. Here is Dalio's map. You only need to watch two dials on the economic dashboard. Number one, growth. Is the economy getting stronger? And number two, inflation. Are prices going up? When you combine these, you get 4 distinct seasons. And assets behave differently in each season. Some fly and some crash. Here is exactly what works and what fails. Quadrant 1. First is the Goldilocks zone, where growth is up and inflation is down. This is like summer. Business is booming. The winners here are equities and corporate bonds. When companies sell more without rising costs, profits explode. The losers here are cash. Holding cash here is a waste and you miss the gains. Quadrant 2, the second one, is the reflation zone, where growth is up but inflation is up too and the weather is getting hot. The winners here are commodities like oil, steel, real estate. These assets are the inflation-proof assets. The losers though are long-term bonds because inflation destroys the value of fixed income. Quadrant 3 is the stagflation storm, where growth is down but inflation is up. This is the worst weather of the lot. The winners are usually gold and inflation-linked bonds. Gold loves fear when money loses value and gold is safety. The losers here are stocks and standard bonds. This is the portfolio killer. A traditional portfolio gets crushed in this phase. Finally, the recession freeze. Growth is down and inflation is down. This is winter, a crash. The winners, the government bonds. When the economy crashes, central banks cut interest to save the world. When rates fall, the bond prices start rising. The losers here are stocks and commodities because no one is buying these assets. They bleed. Ray Dalio's point is simple. You don't know which season is coming next. If you put 100% of your money into stocks, you are betting on a permanent summer. But winter always comes. So to build an all-weather portfolio, you don't pick the best asset. You hold a mix. So when stocks crash, your bonds rise. When bonds die, gold rises. The smart money doesn't gamble on the weather. They dress for all 4 seasons. So don't let a shift in a wind destroy your wealth. Comment the word weather below for a one-on-one personalized portfolio strategy call.